Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. Recently, I have received a comment on one of my videos, which requested to make a video about Crown Castle. This is what we will do today. But first, the usual disclaimer, this is no financial advice and just my personal opinion. Now, let's hop right into the video. If you don't know, Crown Castle is a REIT which holds telecommunication infrastructure. Here is an overview of their portfolio from their official website, where you can see that they hold over 40k towers, 120k small cells, and also 85k route miles of fiber. Meaning that towers are for the coverage in the long range, as the name suggests. Small cells are for smaller cells, thus higher throughput. To get the high throughput, you also need fiber which is connected to the towers and also the small cells. Here you can see the description of the 40k towers, the 120k small cells, and also the 85k route miles of fiber and how they work together. This stock is down around 41% over the last year, according to Seeking Alpha, and has a nice starting dividend yield of around 6%. Additionally, they are trading almost at the 52-week lows. Now let's have a look at the Bill and Melinda Gates Foundation and also the 13F filing. And I will tell you why this is interesting. If we scroll down, we can see that in 2013, Bill and Melinda Gates Foundation took a huge stake in Crown Castle. And over the time, they of course got a lot of dividends. And then they recently, in 2021, they decreased their stake. In 2021 again. And in 2022, they also decreased their stake in Crown Castle. This is just interesting to know, as with the 13F filings, they have to report their changes in shares in different companies. Now let's hop into the stock valuation tool, where I've plugged in all the values for Crown Castle. And we can see that the stock is down quite a bit, but the earnings per share are growing steadily. One thing which we could be worried about is the payout ratio. Let's have a look at this. The AFFO payout ratio over the trailing 12 months is around 80%, and it is increasing to 83% with the forward-looking AFFO. This is above the sector median, but it's not too bad, and it's certainly below 100%, so this should be fine. Now let's go back to the stock valuation tool. For REITs, not all valuation models are applicable, thus we will skip the Graham's valuation model and go to a multiples valuation based on the AFFO, so the adjusted funds from operation. As a comparable company, I have used American Tower, SBA Communications, and also some well-known REITs, as we could also invest our money into those. For those I've used Realty Income and WP Carey. I've plugged in all the values for the stock price and the AFFO and calculated the price to AFFO multiple. Out of this I calculated the average price to AFFO multiple of around 16. Considering the AFFO per share for Crown Castle, we get to an intrinsic value of 117. The discounted cash flow analysis is usually not applicable for REITs, so we will skip this one. Now let's go to dividend discount model, where we consider the yearly dividends. I've plugged in all the values for those dividends, and as you can see, the average growth rate of the dividends is around 17%, which is quite huge. I've projected a low growth rate of around 4.5%, which brings us to an intrinsic value of around 156. One thing to also keep in mind is the outstanding shares for Crown Castle, and very typical for a REIT, Crown Castle is diluting the shares over time to raise capital and buy new infrastructure. This is very common amongst REITs, but usually not what you like to see as a shareholder, but for REITs this is, as said, very normal. Now let's go back to the output tab. As we could not apply Graham's valuation, the discounted cash flow analysis, we only have two valuation models. I will insert new valuation models specifically for REITs in the future. And if you would like to support me on this journey, please leave a comment and subscribe to the channel. This would really help me in growing this channel faster. Averaging the multiples valuation, the dividend discount model together, we get an intrinsic value of $136. Considering a 20% margin of safety, we would have an acceptable buy price of around $109, which would make this stock currently a buy. Please let me know in the comments what you think about this company, and also if you would like to see analysis on other companies. And as always, this is no financial advice, it's just my personal opinion. And thank you for watching.